Well, what about timing? You know, there's an old saying in real estate. 3 rules of real estate. Location, location, location. In Wake Up Money, we say there's another 3 rules of real estate. Timing, timing, timing. Okay? So we want to make sure that we're analyzing, are we at the right time in the market cycle to be doing this? One of the things I teach at Colorado State University is equilibrium theory. This is the theory that markets seek balance. They're just, you know, like nature. Nature seeks balance. Markets seek a balance of supply and demand. And so if we understand that, we can take a look at a chart like this, where we have time on the bottom axis, we have prices, and over time, prices have gone up, but they've been cyclical. There are these market cycles. We could take a look at any market and identify what the equilibrium point is. That would be this line. What is the average point? You know, markets seek balance. What this means is when a market gets above the equilibrium line, there's going to be pressure for it to what? Come back to equilibrium. When it goes below that, there's going to be a pressure for it to what? Come back up. Any idea what the slope of this line is for the United States? Over time, over a 30, 40, 50-year period? It's 5%. The equilibrium appreciation over time in this country is 5%. So whenever you see a market get above 5% appreciation, that would be a signal to start to watch out. Whenever you see depreciation or prices start to fall below 5%, that would be a signal to start to watch that market because it may be starting to come back. Okay? And of course, what happens when markets get crazy? Totally out of control, as we saw in the mid-2000s. You know, Warren Buffett has made a lot of money with this chart. He has an old saying, you know, sell high, buy low. Or he has another thing that he says, you know, when markets get totally out of control, when you reach a point like that, he says, when the markets get greedy, we get fearful. And then when the markets correct, and of course now it's headed down and the media horribilizes the data, and you know, everybody starts to go into fear. He says, when the markets get fearful, we get greedy. And I think that's pretty good advice from a pretty smart investor.